A hostile bid in the drug sector, but late today, Baxalta rejected an unsolicited $30 billion offer from Ireland-based Shire. Now, if the deal were to happen, it would create a leading biotech company focused on rare diseases. The bid, or word of it, sent shares of Baxalta soaring and Shire falling. Look at those numbers. Bertha Coombs has more on the drama in the drug sector.
Baxalta has only been public for a month, but what a month it's been. The biosciences company, which makes hematology and immunology drugs, was spun off from Baxter International. During Baxalta's first earnings call as an independent company last week, CEO Ludwig Hansen said the firm was open to acquisitions as an acquirer.
With respect to M&A, we are hungry for M&A, but we are not desperate. I think we will use the discipline, making sure that the strategy is aligned, the financials are there, as well as that we can integrate the organization.
But it looks like Baxalta may now be the target, not the buyer. Shire Pharmaceuticals made an offer for the company, which Baxalta spurned last week. So today, Shire's going public with its hostile $30 billion bid in what has been a busy year for healthcare mergers and acquisitions.
2014 was a record year. That year saw $270 billion in announced deals. This year, we have already eclipsed that. With today's announcements, with the unsolicited bid by Shire, we saw about $330 billion in announced transactions.
For Ireland-based Shire, it's an about face. It had agreed to be acquired by U.S.-based AbbVie last year, but the so-called inversion deal fell apart after the U.S. changed the rules on American companies acquiring foreign firms to secure tax savings. Now Shire says its deal for Baxalta would give the combined company a strong profile in rare disease drugs and benefits on the tax front. S&P's Rich Peterson says this year has already seen nearly $100 billion in deals with U.S. firms selling to foreign acquirers.
Some of these foreign companies were one-time U.S. domiciled companies, whereupon they reincorporated abroad to take advantage of lower tax rates.
Baxalta rejected Shire's bid, saying it would be severely disruptive at such an early stage as a public company. And analysts say it can afford to hold off. Baxter International still has a 20% stake in the firm, and the rules prohibit any other investors from gaining more than a 10% stake, making a hostile takeover very difficult. Bertha Coombs, Nightly Business Report, New York.